Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Friday, April 3rd. It is the weekend. It is finally here. These weeks have been. They seem like they are very long, so it is important to get some rest and relaxation, which I will be doing very shortly in a minute here. So, first things first, the risk disclaimer in front of you. Everything that we're going over is for information purposes only, not giving out any advice or recommendations. So let's go through first of all the performance for the week. I always like to do a little quick recap of that, and then I will dig into some of the finer points. I'll leave you with a couple themes to kind of that I will be concentrating on for next week, and we'll see how it goes for next week. Again, what we always do is I do a very detailed analysis over the weekend. I will be doing that, probably maybe doing a little bit Saturday and then doing most on Sunday. But I like to go through the sectors. I like to go through all the internals, look under the hood, and all that goes out in the member video, as well as then I also put together a watch list too for names that I think are showing relative strength. So that is what the plan is for the weekend. As always, we put out those weekend videos for members to get everybody ready for the week to go. First of all, for the week, a lot of red in the equities. SPY finished down 2.2%. The diamonds finished down 2.6%. IWM really took a dive this week, down 7.1%. Is that a concern? It is a little bit of a concern. I do think that small caps do sometimes lead the market move. Remember, they outperformed the week prior, and this week they underperformed. So we'll see how that goes. And I'll go over the charts in a second in the small caps, but not one of the things that I like coming to the end of this week. Qs, again, they outperformed. They returned to the outperformer, only down 1% for the week. Interesting, emerging markets were only down fractionally for the week. And international developed, that's your EFA ETF, down 3.7% for the week. Bonds and golds, they did okay, but they certainly weren't screaming higher this week. They were up fractionally as well for the week. If we looked at sectors, your best performer, something a little bit different this week, were the energy names, right? The squeeze that went on in crude this week, talk of a possible OPEC deal. That was the catalyst going on there. Also, consumer staples did very well, and you had a couple of the defensive groups. You had consumer staples, you had healthcare names outperforming. The healthcare names have looked the best. They've showed some really nice relative strength. If you go through, which we will be doing this weekend, but if you go through some of those healthcare charts, you're going to find that there's a lot of really pretty looking charts, right? There's some names that don't even look that affected from what we've seen over the last month or so. So biotech was also up 1.5%. Chinese internets fared very well. Got hit a little bit on that LK story this week, but still, outperforming. And again, going back to that emerging markets outperforming, I think a lot of that had to do with China for the week, and some of the other areas like Russia, which was up 9%, which if you look to your bottom left, you can see Hong Kong was actually up 2.7% for the week as well. Steel names, there was some talk of infrastructure this week that helped those names a little bit. I would say of a squeeze there as well. On the flip side, the names that were on the bottom of the list really got hit hard. Home builders down over 15% for the week. That's after they've already been down quite a bit. You had the banks down again. Double digits there down over 11% for the week. Retail got hit. So, again, it seems like some of the more vulnerable areas, right? There is a separation that's been going on a day-to-day basis with some areas that, could possibly actually do well in this situation or not do that poorly versus other areas that are really getting hit a lot on the consumer side and the banking side. All right, so that's the performance recap. A couple things that I thought interesting. So let's talk about the VIX for a minute. The VIX, I've been saying for a while that I would like to see this thing move below the 20-day moving average and get below 60 and into 55, 50. So look at this thing. Even though the market was down, while the market was down again today, the VIX was down again. So there's a divergence going on there. And this is what we have to see, like baby steps, right? I've heard from a few people saying, "Oh, well, this is a wedge, and we could rip higher." I thought that too. I thought maybe we would stop at the 20 day moving average where we did last week, and then maybe make another, another rip higher. But even though the market sold off this week, the volatility just wasn't present. So I view that as a good sign, and I'm going to chalk that up to a positive. We still have backwardation in the VIX curve, so I don't think we're out of the woods, but it's a process, right? I mean, we could also see a bounce on the 50-day moving average, but take it for what it is. I think it's a step in the right direction. And if you're following like the process of, a major correction, a move into bear market territory, it's a process to get out of it. It's not, lickety, 1 week you're back up. It is one of these. It's a longer process. So I wanted to look at a couple other things too. There's something that I haven't really gotten into too much when we look at these uh, corona cases and so forth. Whenever I post something, everybody seems to be an expert on Twitter about testing and this number and that number is not right. And I get it, right? Everybody seems to be very like knee deep in these and in their opinions and what they think. But listen, I'm going to rely on the numbers, right? Every time I put out one of these real numbers, somebody gives me, oh, well, the testing. Listen, we can't control that, but let's dig through the numbers for a minute and see what kind of conclusions. And again, each country is going to be different in what they did, but I want you to just to look at the process, right? So this is South Korea. I notice the time, right, from when South Korea started. So again, this is everything we're going to look at is total cases. I'm not talking about testing. I'm not talking about deaths. I'm not talking about recoveries. Let's just look at the total cases here for a minute, right? So in February, what they started to do was this was their first week of spike, and really look at you could, I don't know why they have two columns here. They basically mean the same things, but if we just want to concentrate on this column, right? So here's your number, here's your net change, and here's your percentage increase, right? When people talk about like the curve flattening, it's the slope of the curve, right? So that has to come down. So here is 1 week, 2 weeks of increases. And then after 2 weeks, their numbers started to slide. So this was really quick for them. After 2 weeks, the increases started to come down, right? So they did something right. I mean, they only had 2 weeks, and then the third week they started to see decreases. And look at it now, right? I mean, it's their cases are very marginally going up. Italy, on the other hand, had more of a severe problem. And if you look at how many weeks this took them, and again, they're still in the middle of it, right? But if you want to take week one, right, which was at the end of February, week two still increases, right, at a little bit of a slowing manner there. Week three, right, still showing some increases, but starting to trail off. Week four, again, they started the week growing after the weekend, right? So that's week four. Week five, now we're getting into single digit percentage increases, right? In week six, right? And the cases are going up less dramatically. They're still going up, right? The total number is still going up, but the rate, the percentage is decreasing. So that's about six. I don't know how many weeks I counted there, 6 or 7. So just take that for what it is, right? Because this is not every country is different. So where are we? Right, so here's probably I would say the first week, right, and going back to the beginning of March. Second week, increasing, increasing. Third week, the numbers are started to kind of trail off a little bit from being this hot, right? So that's the third week, and then we have the fourth week, which is now the number of reported cases today dropped down to 8.7%. So, it's moving. It's a step in the right direction. It's still going to take time before we could probably get down. If we continue to have the, basically various different states locked down, right? I think we will eventually get to this, but it's going to take some more time. So keep that. The reason why I bring this out is not to say, oh, this is going to be, taken care of in a few weeks, but just watch the trend, right? Just if you're a trend trader or anything like that, we've got the first day into basically less than 10% increases. So we'll see if this trend continues. But notice it has been moving in the right direction all week long. Except for a couple. Every day is not going to be perfect, right? But we're down in the beginning of the week. It was plus 19%. It's only plus 8%. So again, the cases are still rising, but the rate of growth is slowing. All right, so that's all I'm going to say. We're not going to talk about testing or anything like that. All in all, we don't need. Forget. I'm not going to say what I was going to say, but we need the overall cases to start to continue to increase less until we get actually cases going down. So that's the whole goal of this, and I think it helps me to go over this exercise to say, hey, be patient with this and you're trading, right? I know we're dealing with this on a day-to-day basis in our personal lives as well, and it's not easy for everybody, right? But I'm just talking about in terms of trading and how you're positioning yourself. Just realize that this is a process that we have to get to. So I'm being, again, optimistic that we're going to eventually get through this. And whether it's, weeks or months, I think we will be able to get through it, right? So that's all I'm going to say. I'll leave this subject. Don't send me nasty things all weekend long, which I'm fine if you do that. I'll be able to take it anyway. But I posted this already on Twitter, and everybody's telling me, "Oh, it's got to be. This has got to happen. That's got to happen." Okay, well, whatever. You could have your opinion too. Again, I like to look at the raw numbers. Some people like to have their own opinion. I prefer the numbers. So small caps. Let's start with the small caps. I think they're the most vulnerable of testing. They could come back and retest, right? This would not be that much further away at this point. One thing that I saw today on the 1 hour chart was that we broke value. So interesting to look at what next week's value area is going to be like. Remember, the value area is based on the price, the time, and the volume, right? So this is a value area drawn over. Just get out of this. Whoops. Remove that. So we basically were in value all week long, as were the SPY and Qs, but they kind of leaked outside of value. So, and then they came back and they retested it. They could not get into value. So we'll see. Futures open much lower on Sunday night. We're going to be below value, and the trend is going to be lower for the week. It's going to start the week lower. So we're going to have to just wait and see, because we closed right at that bottom of value. SPY. And I'll look at SPY rather than futures, but I know we pushed to the top of value in the beginning of the week and kind of failed there, which was a failure, but we also didn't break value, right? So let the price determine what you think is going to happen. Again, I really like to stay focused on what price is doing rather than price and data, rather than what opinions are. But if we break 245 in SPY next week, then I would say watch out to the downside. Qs also stayed in value all week long, and again they had that outperformance when you compare them to other indices, where we were actually outside of value for the beginning of the week. But again, they finished right inside value. So again, it's going to come upon where we open up Sunday and where we start the day and close the day on Monday, if we're going to end up in value or below value. If we end up below value, sure, we might have a retest. But if you take things day by day, and make sure that you don't get make sure that you are not over positioned in any fashion, and have a relatively nice portion of cash, you can navigate the situation a lot better than being overexposed. All right, I know that's a very general statement to make, but we'll see, because I think right now we're kind of caught, right? And we're waiting for that next direction. So we'll see if small caps are telling us something, or we'll see if they bounce back and hang in there next week. All right, guys, that's it for let's say this weekend's video. For Friday's video, have a great weekend. It gets a little bit of exercise in there. It helps me tremendously. I've been running this week. It has done wonders for me. And then Might have a few cocktails tonight. All right, guys, have a great weekend, and I'll see you on Monday.